I'm Angeline Ong and welcome to your look ahead to Tuesday, the 19th of December. And we start with central banks. It's quite a central banky theme earlier on in the week with minutes from the RBA's last meeting. Just showing you the ASX 200 because Australian shares did fall and ended lower due to real estate stocks after the New York Federal Reserve President pushed back against expectations of an imminent rate cut. This is although elevated M&A activities limited or offset the decline. But what's perhaps more interesting ahead of tomorrow's event is the Aussie dollar versus the US dollar, because what we have been seeing here with this cross is it has been slowly ticking higher since around mid-October. Also, the traders of this cross are saying that many out there should be aware of the growing risk of a near-term setback. And signs are that the upside is now stretched as spot trades near the 30 upper Bollinger Band. In terms of central banks, Japan as well will be of interest in the coming session, because we've got the Bank of Japan interest rate decision. Now, this is seen as the set piece in terms of FX volatility for many traders out there. Show you the Nikkei 225, which is called Japan 225 on the IG platform. Bank of Japan's policy decision on Tuesday is probably going to be the main event in Asia this week as well. 17 out of 28 economists that have so far been canvassed have said that this might mark the time for negative rates to be scrapped, making the Bank of Japan one of the few central banks in the world actually tightening. But just showing you this as well, because if you look at the yen versus the dollar, what I can tell you is that it has also come off that 150 level, which has been seen by many as the key psychological level against the dollar after the yield gap with the US widened on hotter than expected inflation data. And that's also seen as the key intervention risk level. But it has come off from there, as you can see on my chart. What's also interesting is that we've got inflation figures out of Canada. Now, Canada, if you remember, one of the earliest to move on interest rate hikes. It stood pat on policy recently. And from the US, look out for API crude oil inventories, oil prices falling recently and then gaining again on supply related issues. However, the longer-term trend for WTI so far still remains a downward trend overall. And in terms of earnings, I just want to shift your attention to FedEx, because Federal Express, which is its long name, but it's called by many as FedEx, is out with second quarter earnings. Now, this company is seen reporting a 1.8% fall in sales to $22.4 billion. From around $22.8 billion a year ago. This is according to the mean estimate of 20 analysts based on LSEG data. And LSEG's mean analyst estimate for its earnings is around $4.20 a share. But FedEx is an interesting one for us in terms of how it has its finger in almost every pie and gives us a good indication of how many other industries using its services are actually faring. And that's your latest look ahead to Tuesday. For more market moving news, I'll be back on Beat the Street at 1:30 London time to give you a heads up to the US trading day, and IG's Jeremy Naylor will be on at 7:30 on early morning call ahead of the European trading session. Follow me on Twitter at Angeline Ong. This is IGTV.